Hello and welcome, and thank you for being here today. I know that you have busy schedules and running back and forth and everything else, but I wanted to record this because there's a lot of misconceptions out there, and I wanted to go through this, and I wanted to make it so as a potential buyer for real estate or for anything else, you understand all of the aspects of it so you're not walking into it blind. Whether you're considering bidding on a piece of personal property in an estate sale, or you're evaluating the purchase of a home, a farm, commercial building, industrial equipment, or anything like that, this guide is built for you. My name is Matthew Price, and I hold both North Carolina auctioneer's licenses and North Carolina real estate licenses. I'm a broker in charge, and I was the 2018 president of the Auctioneers Association of North Carolina. And I can tell you, between 2018 and today, the world has completely changed, and it's all part of, the progression of society. So I want to give you the complete picture. I want to paint a picture in your mind as to how the auction is and how we as auctioneers help you with either buying the property or calling a bid. $100 bid now, 100 and a quarter, 100 and a quarter, half, 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 75, 5, 75, now $200 bill. I want to get into your mind that it's not about bidding to the point of you're bidding pennies on the dollar. We want you to understand that you are bidding to buy and get a great deal, but also be able to say, hey, I got a great deal and I got to put a little money into it, and we're good. So we're going to cover everything. The different ways auctions are run, what things really cost, how to research before you bid, and what happens on auction day all the way through to the end of the auction. So let's get started on this. And understand, by the end of this, you're going to understand the way auctions work, the way auctioneers and insiders do, and you'll be equipped to work with auctions and auctioneers intently. So here's a quick map of everything that we're going to cover today. 9 sections, each focused on a critical area that separates informed buyers from unprepared ones. And we will move from method to method, and money through preparation, and bidding and mechanics, auction day itself, your rights and representations, closing, and we'll finish it all up with common and costly mistakes buyers make, and those also considered mistakes and red flags, such as buying a piece of property or something like that that may have some issues, but we'll talk about that pretty soon. So feel free to use this as a reference. Jump to the section most relevant to where you are in the process, and then you can even show your friends, family, and whatnot what it's all about and why you're going to do this. So let's talk about the methods of the sale first. Methods of the sale is not all auctions work the same way. And what we mean by that is the format determines your risk, your strategy, and how to approach your bidding. And before you even register for an auction, you need to understand that the kind of auction that you're walking into. Some think you're going to be walking into a reserve auction when it's actually absolute, and some think you're walking into an absolute auction when it's actually a reserved auction. And we'll explain the difference between the two here soon. So let's start with the two formats that are commonly the most popular. Absolute auction is basically absolute, basically what it says. And that is that everything sells to the bidder, and that's it. Property sells, period. And the highest bid wins, no matter what the number is, no matter what the floor is, nothing of that. There's no minimum, no seller, no second guessing. The only time that you may think that there's a reserve or something to that effect, it is pretty much when we start an opening bid and everybody's terrified at the beginning, so they don't actually cast a bid, so the auctioneer calls for $100. Oh, $100, then 100 and a quarter, 100 and a quarter, half. And the strategic benefit of that is just to get it running. For buyers, it's the most exciting and most competitive format, the absolute auction. You know the sale will happen, the seller knows that too, and the commitment draws more serious bidders and active competition. The strategic implication for this is that for the buyer, you, absolute auctions reward preparation, know your walk-away number before bidding, and the energy is in the room and online. You can pull bids past what makes sense to you, or you can probably say, I'm going to put one last bid in, and then you're going to walk away. But don't let your emotional momentum outrun your math. So if you say, I'm going to bid up to $125,000 and somebody bids $130,000 and the next bid is $135,000, sometimes in your mind you'll say, well, I'll go ahead and bid $135,000 and I'll find a way of getting that extra $10,000 when you really just want it for $125,000. That's overrunning. Sometimes you can let it go for so much that, well, you can literally price yourself out of a complete, beautiful piece of real estate. And let's talk about reserve. A reserve auction means the seller has a set of confidential minimums. Bidding happens normally, but if the bids don't reach that hidden floor, then the seller has no obligation to sell at all. And you can be the highest bidder in the room, hold your patter up all day, and still go home without the property because it never reached that minimum reserve. You can be a Superman and you could be the best bidder on the planet, but if it doesn't reach that minimum or that reserve, you go home empty-handed. Here's the key for buyers when the reserve's not met. The auction often doesn't just end. The auctioneer may work the gap, working back and forth between the seller and the high bidder to see if there's a number that can be agreed on. And this post-auction negotiation window is worth knowing about, because if you stop at 125 and the next bid is 135 and the seller wants 140, then we can generally, okay, well, they didn't reach the minimum, but let's see if we can work back and forth and come up with a number that would satisfy the seller's need for X amount of money. Under North Carolina law, if the auction is advertised as having a reserve, it must be disclosed to all bidders before bidding begins. If you see no such disclosure, should you assume that you're in an absolute auction and it's actually good for buyers? No. And the reason is because under federal law, all auctions are with reserve unless otherwise specified as absolute. So under North Carolina law, we have to advertise if it's absolute or if it's going to be a reserve. But under federal law, there's no such mandate. Everything is considered a reserve auction unless it is specified in the advertising that it's absolute. Yeah, I know it's weird, but you need to know that. So let's talk about minimum bid auctions. The minimum bid format is the most transparent of all the seller protected auction types. If the seller says publicly before the auction starts, the property will not sell for less than X, everyone in the room knows the floor before anyone raises a hand. Some people will get up and walk out because they don't want to see if they are going to be competitive or not, and that's fine. But some people like to know what they're going to be competing against and what the minimums are, so they can go ahead and be a little bit more cognizant of how they're going to be bidding, so they can come up with a better strategy. This is actually quite buyer friendly, and you can decide before bidding even opens whether the starting point makes sense for you. If the minimum already is above what the property is worth to you, you can walk away without wasting your time, or you could turn around to the auctioneer and say, this is what I'm willing to bid, and leave it with him. And if this property doesn't sell, then they can probably come back to you and say, okay, well, here's what the seller says that he needs. Are you willing to come up a little, or willing to negotiate a little? So in a sealed bid auction, under North Carolina law, a sealed bid auction is not really an auction, but it's an auction. A lot of real estate brokers will do this. They will have a box for your offers, and then you fill out the paperwork and then slide that into the box, and then the broker takes it back, and they may call you and say, well, I got one over here for 360, and would you be interested in doing 362 or 365? That's actually holding yourself out to be an auctioneer, and it's a regulated activity. The strategic implication is critical. You get exactly one chance to make your best offer. And unlike a live auction where you can escalate the bid by bid, sealed bids require you to commit your real number up front, and there's no discussion about it. The thing about it is that it's not like a live auction. There's no crowd, no energy, no back and forth bidding. Each buyer submits one written bid confidentially by specified deadline. All bids are opened at the same time. I strongly dislike those particular quote-unquote auctions. My strong advice to sealed bid participants is do your full due diligence. Determine your true maximum price and bid that number. Bidding conservatively, hoping to negotiate later, is a mistake, and chances are you will not win it. There's no later. All the standard auction terms still apply in a sealed bid format, and review the bid package carefully as you would any other contract. I will also say an attorney did a little asterisk on me because I had him review this. And he says the rules governing sealed bid auctions vary by state and transaction type. Always review the specific terms of any sealed bid invitation carefully and consult legal counsel for high-value transactions. And this is a Matt Price asterisk. If you are put in a situation where you're in a sealed bid type of situation, you want the broker or whoever is hosting that sealed bid, you want the full inspection report, you want the full CMA, you want the full BPO, you want everything there in front of you so you can make a decision as to what the property is worth. And then you want to bid accordingly. Without any of those documents, without any of the disclosures that are required by law, I'd walk away, because it's not going to be fair to the buyer who buys it, and there's an inspection report there that says everything is honky-dory, and then you come around the corner about 3 days after you spent $400,000 on a property, and you see the foundation has a 1-inch crack in it. That's not good. So let's talk about delivery formats. This is my favorite because each format has its own unique mechanics. Each format is fun. And it really tickles me whenever I see buyers who are intent in buying continually hitting the bid button, and they are smiling when they do it. And when we're doing live on site, you can see the twinkle in their eye. They have already dedicated themselves to purchasing this particular product. So beyond the pricing format, you also need to understand how all of these are delivered, because that changes your experience as to a bidder significantly. And sometimes your real estate broker won't pass on these particular deals to you because they are stuck more in a traditional real estate model. So it's up to you to go and do those searches, and we try to advertise everywhere so you can so it's in front of you. But I digress. So let's talk about live on site. The classic format that we're talking about is you're there in person, and you can see who you're competing against. You can see the property. You can see whatever defects are there. You can read the room. You can tell if there's people who are like, ugh, there's going to be a lot of work that has to be done to this, or man, this is going to be fantastic property. The auctioneer controls the pace. And we're not talking about the auctions on the courtroom steps. We're talking about live auctioneers doing on site. The courtrooms, the courthouse steps, you generally are going to have banks and other investors bidding against you for a property that may need $100,000 worth of work done to it, and it's only worth about $135,000. But the bank and the investors always try to work something out in which the bank never lose money. However, that being said, you never know. Since the auctioneer controls the pace, they typically run fast. And most real estate auctions are concluded within 20 to 40 minutes. And active bidding may extend that to, 40 to 50 minutes. After the property has been determined to be open for sale. And what we mean by determined open for sale is click, bidding is now open, and then click, 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 bidding just continues until the end. So what is important in a live call setting is you register as soon as you get there. You bring a valid ID, and if required, a cashier's check or proof of deposit funds, so you know your number before you walk in the door. And you have to do your homework before that period of time. Does that mean that you're going to get a deal and there's going to be property or the property needs work? No. You have to walk into a real estate transaction or any other transaction that there's going to be some kind of repairs. Doesn't matter if it's a car, truck, van, bus, VCR, doesn't matter. And then know your number before you walk in the door, because you have too many unknowns unless you have the inspection report and the disclosures right in front of you. Online only. And this is one of the most important things that we have here is online auctions are increasingly common, and they run over a set window, say often 5 to 14 days. For real estate, it could be, with me, it's 5 to 30 days, depending on the situation. And they close in a specific time with automatic extensions on if bids arrive near the deadline. The only time that this is not the case is if it's a court-ordered sale and the court says it will sell at 5 o'clock on Friday, July 9th. Then on Friday and July 9th at 5 o'clock, hammer drops, whatever the bid is right then and there is whatever it is. The advantage for buyers is the flexibility. You can bid from anywhere in your at home, at work, in your car, on top of when you're at a NASCAR race, anywhere. And on your schedule, a lot of people think that you have to be logged in at 7 o'clock every time in order to get that particular schedule or get that particular bid in, and that is not the case. So not only that, you also get the opportunity to what they call proxy bid. You can bid up to a certain level, and that certain level you don't have to go over until you log in and say, you know what, I'm willing to give $10 or $100 or $1,000 more to it. That's completely up to you. The downside is that you lose physical inspection opportunity on auction day. And the competitive dynamic here is different. You are also to trust the platform mechanics. Now, I can also say this, that you will also be given time, in a specific time, to turn around and inspect the property. And that might be where you hire an inspector or you have somebody go out and take a look at it. If you have a real estate broker, you can do that as well. Commonly with me, I am the person who's representing the seller, So I'm not necessarily going to run out there and inspect the property for every single person and look for single individual things. That's why you would probably want a true inspector to go out and take a look at it for yourself. Always use a reputable licensed auction platform, which we use HiBid, and understand how the extension windows work before bidding. I can tell you our windows work every 2 minutes. So it extends it every 2 minutes, and there's no, it resets every single time somebody makes a bid. And once again, live on-site, live on-site or online only, or simulcast is all up to the courts as well, because in North Carolina we have a law that says if there's a bid and a winning bid, then there's 10 days to which that bid can be upset, especially when it comes to court sales, probate, etc. Simulcast combines live and online in real time, and if you're bidding online in a simulcast auction, you're competing with people standing at the property. They can't hear your bids called out if you were there in the room, but the timing lag is something to be aware of. Usually it's 7 to 14 seconds, but other times it could be, it could be 2 to 3 seconds, or it could be 2 to 3 minutes. I generally do not do simulcast auctions unless it's personal property auctions, because it can take a 2-hour auction and turn it into a 3-hour nightmare, and you're still only bidding on 2 or 3 things. The timing lag is something that I really don't like, and a lot of bidders don't like, so I generally keep simulcast out unless somebody really requests it. Most platforms current bid instantly, but delay to the auctioneer may take a second or two, and understand that the platform's policy on this before the auction starts. And I generally try to tell people beforehand that this is something that will happen, and not to be upset about it. So let's talk about the money. The buyer's premium, deposits, payment deadlines, financing risks, and that what default really costs you. And because there's a lot of people who think that they can just go in, bid, and then fly away, and there's no harm done, right? So the buyer's premium, or the buyer's fee, and how it affects your price is very important, because you can easily find yourself upside down in a particular property and you didn't mean to. So what is the buyer's premium? The buyer's premium, or the buyer's fee, is the most misunderstood cost in the auction process, and it catches unprepared buyers every single time. So here's what it is. When you win a bid, your total purchase price is not your bid. Your bid, called the hammer price, is the starting point. Your hammer price is the starting point for everything else. The buyer's premium, usually anywhere from 10 to 20%, depending if it's personal property, real estate, it's going to be significantly lower, is added to that hammer price, and that is what your contract price comes up, or your total purchase price. So the buyer's premium is the additional percentage added on top of that number to determine what you actually owe. So if you bid $200,000 and the buyer's premium is 10%, you owe $220,000. That's $20,000. That $20,000 is not optional, it's not negotiable, and it's not waivable. It is the terms that you agreed to when you registered, and you sign a contract when you get there saying that you understand that that fee is due, regardless if you are able to come to the table with the rest of the money. The buyer premiums typically range from 5 to 15% for real estate. On personal property and estate auctions, they can go higher. Online-only platforms sometimes charge a separate and higher online buyer's premium. So, like, say for instance, if I put 10% up there, and uh, the venue charges me 10%, then you're going to see the buyer's premium show up as 20%. And of course, I always get the phone call saying, "Why is your buyer's premium so high?" Online-only auction platforms do this because that is their business model. It's not my business model. So with the buyer's premium, the rate you see may be different depending on how you're bidding. If you're bidding by proxy or you're bidding live cash, etc., then it's going to be different across the board. My strong advice before you ever start bidding, limit in your head. Take the hammer price you're willing to pay and subtract the buyer's premium that you are going to pay, and that will become your maximum bid. If you want to pay $220,000 total and the premium is 10%, then your maximum is $200,000, not $220,000. And this also depends on your financing methodology. If you have $180,000 in financing and you got a 10% buyer's premium, and you also have to come to the table with a little bit more money, your top bet might be $160,000. So the buyer's premium is set to be published in the auction terms before bidding opens, and you can't argue about it after. Know it, factor it, and it's the cost of participating. And I can often tell you that 9 times out of 10 auctioneers will not flinch when they say, "Can you come down on the buyer's premium?" I can tell you that the answer is no. Some cases, some auctioneers will do it, but it's considered a concession. So let's talk about the deposits, payment deadlines, and default. Here's where things get very, very real and very, very quickly. The moment the auctioneer says sold and points to you, you have entered into a legally binding contract. Everything that follows is governed by the auction terms you agreed to when you registered. So if you put your deposit down on credit card and then you offer a chargeback, that is considered wire fraud, and it has been successfully prosecuted across the board. So let's talk about deposits. Your earnest money deposit is typically collected the same day, right at the auction. For real estate, this is usually 5 to 10% of the purchase price. For personal property, it varies. Come prepared with a cashier's check or certified funds in the correct amount. Showing up without proper payment is the same as not showing up at all. And 9 times out of 10, we will give you, like if we do it at 10 o'clock in the morning, we will give you until 5 p.m. to get to the attorney's office with that check. If you do not do so, we find you in default and you owe us the full amount for the buyer's premium. The balance is your remaining purchase price plus the buyer's premium, and that's all due at closing. Typically 30 to 45 days later for real estate, sometimes either 14 to 21 days if it's cash or certified funds. Financing. Here's the critical point that most first-time auction buyers miss. You cannot typically make your bid contingent on financing. The auctioneer will not accept it. And the reason is because the sellers want to turn over the property, and we are not going to have an auction and then later we're going to have a second auction because you can't come up with the funding. You have to show us that you have the funding ready to rock before we issue a bidder number. This is not a traditional real estate contract where you have financing contingencies. There is no due diligence process either. So you can't pay us a little bit of money and say, "Well, I'm gonna wait 30 days so I can get all the inspections done." Nope, doesn't happen. You bid, you buy, you can't close. The consequences are severe. We sue, and because we're not talking about a little bit of money. We're not talking about you bid $1 on a little trinket and the buyer's premium is only 3 cents. We're talking about you have bid on a property, won it, and you owe us $20,000, and that goes beyond small claims court. We're talking about the big courts. So if you need a mortgage to purchase, you must have your pre-approval in place before the auction. You must give us that pre-approval letter, and we must add it to the record, and then we hand that entire package over to the attorney. And then the attorney works it after that, and then everybody gets paid accordingly post-auction. Many buyers work with their lender in advance specifically for auction purchases. Some lenders are unfamiliar with the time frame and work with one that understands that compressed closing schedule, because I can tell you some people like to play games, especially when it comes to veterans, especially when it comes to other folks, and they find themselves caught up in a conundrum because now they not only do they owe money, the mortgage company, but they also now have to defend themselves in a lawsuit. Default. This is not my favorite thing to do. I do not like chasing people down. That's why I send people in blue and gray and all kinds of colors with little lights on top of their car after them. If you win and cannot close, you lose your deposit. Full stop. And depending on the contract terms, the seller's damages don't stop there. So they can pursue you for the resale costs and the price difference and all of the other stuff that they have paid in order to have the property sold. The auctioneer can come after you for marketing costs, labor costs, and all of the other costs that are associated that the auctioneer had to pay for the sale. And they're going to come and get it because it's going to be substantial. Both the seller and the auctioneer, their costs are going to be substantial. So you only want to bid what you know you can close on and what you can afford. And there's a little asterisk there for an attorney's note. Default rules vary by state and contract, and you want to consult a real estate attorney before bidding. If you have any doubt about your ability to close, I will also say this, that you probably want to contact a real estate broker who is familiar with auctions as well, because they will help you and walk you through it. But we'll get down to agencies down below. Pre-auction preparation. This is where winners separate themselves from the losers. It's pretty much cut and dry. The buyers who do well at auction are the ones who have done their homework before auction day. The ones who get burned are the ones who haven't done their homework. Everything you need to know about the property, you need to find out before you start bidding, not after. And I'm going to tell you that if you sue the auctioneer because of your inability to do your due diligence, it's not going to look nice in court. So here we go. So due diligence is not optional at auction. It's survival. And what I mean by that is there is no due diligence. We will not accept a due diligence fee just so you have 30 days to do whatever. We will market it for about 3 to 4 weeks, and during that period of time we will have 5 to 6 days in which you can go out there and have your inspectors inspect it, or we'll have a lockbox where they can go out there and do the same. In a traditional real estate transaction, you have inspection periods, financial contingencies, and the ability to back out of something if something is unexpected. And historically, there are some valid reasons why you would not want to do that. In most auction transactions, you have none of those safety nets. You have to do everything ahead of time. It's almost like the kid saying, "Well, that's okay. I got to get out of jail free card when I was playing hide and go seek." There is no get out of jail free card for auction real estate transactions. No periods of financials, inspection periods, no financing contingencies, and you can't back out after you have a winning bid. The property sells as is, and you're expected to know what you're buying before you bid. Historically, we have the disclosures, we have letters, we have all of that information, including a PIN from the government agencies. They're available to you in a bidder packet. So once you say, hey, I'm interested, here's the bidder packet, let me know when you're ready and we'll get you registered. So we'll start with a title search or review of the preliminary title report if one is available. Look for liens from unpaid contractors, IRS tax liens, court judgments, or mortgages that may not be extinguished by the sale. We try to make sure that we have that as far into the bidder package as well. Understand that when encumbrances transfer with the property and what happens to existing liens at closing. Do they transfer to the next person or do they not? I know special assessments do transfer with the property. It does not stay with, it does not move on or does not get canceled. And special assessments are they're putting in a sidewalk into your particular property and it's going to cost you, $3,500 in order to put it in. There's an attorney note that is here as well, and the treatment of liens at auction varies significantly state by state and auction type. In foreclosure auctions, certain liens may be extinguished in a voluntary seller auction. That kind of sort of does not register in North Carolina. In North Carolina, certain liens do get extinguished, but in voluntary seller auctions, they do not. And so you want to make sure that you always have the title attorney review the chain of title before building or bidding on real estate. And the reason is because if the lien transfers with the property to the new owner, then the liener is going to be asking you for that money ASAP. A perfect example is a mortgage. A mortgage is out there, they default on the mortgage, and then when you default on a mortgage, guess what triggers? Everything is due right then and there. So if you have $180,000 left on a house and you failed to pay the mortgage, well, now you own $180,000. You owe $180,000 ASAP. So for inspection, you want to attend every preview and inspection opportunity, and the reason is because if you don't see it and you don't have any questions for your particular inspector, then your inspector will tell you what's going on, and then we'll ask you if you want any questions about what to do here. So let's be completely honest. Those inspection days are for you, the bidder. They're not there for the seller. They're there for you. They're there for you, period, not the seller. So that's always good for you to understand that the inspections are good for you and you only. And now you could come back to the seller and say, hey, this is kind of important, but chances are when we're selling it as is, hey, this is kind of important, is not going to wash very well with the seller. Taxes and HOA fees. Delinquent property taxes are a lien on real property in most states, including North Carolina. If you buy a property with $15,000 in unpaid taxes, those become your problem at closing. So they do transfer with you. Same as with HOA assessments and special district levies. You want to check the county records and ask the auction company directly about any known unpaid obligations, and usually we will hunt those down before the property goes in front of the general public in order to sell the property. And you want to make sure that you know your value. You run your own comparable sales. Don't rely on my valuation, because I generally don't use Zillow or Realtor.com, because those values are established by a mathematical equation, whereas I actually sit down, take a look at it, and compare 3 bedroom, 2 bedroom, 3 bedroom, 2 bath, etc., etc., etc. So don't trust what I put down there, but also don't trust Zillow, Realtor.com, or any of the other online venues, because chances are they're doing an algorithm type thing. And you want to know what the property is worth before you walk in. The number is, and the number should be, your ceiling. And what I mean by you do comparable sales, you want to find them inside of the neighborhood is best, within 6 months is best. So let's talk about reading the auction terms and conditions. The terms and conditions document is the most important piece of paper associated with any auction, and it's the one most buyers skip. And the reason why they skip is because they see this solid block of text and they don't, they just have a meltdown. By registering and placing a bid, you're legally agreeing to those terms. Every single provision in there, the buyer's premium, the deposit, the closing timeline, as-is clause, the default remedies, all of it is binding. And I didn't read it, will not hold up in court. So if you think about it, well, I didn't read it. It's not in the terms and agreement. That's my favorite thing is, well, it's not in the terms. Well, here's the terms. Here's the bidder packet. We had an extra bidder packet the day of, and we hand it to the court, and we let the court just have a field day with that. And the auction company has no obligation to make any exceptions whatsoever. We tell the sellers that we're there to sell their property, and that's what we're going to do. And whether hell or high water, it's going to get sold. So what to specifically look for? First, if the auction is absolute or reserve. This changes your entire bidding strategy, because you may think that you're going to get it for $100,000, and the reserve is probably $330,000. Second, what's the exact buyer's premium, and is there a separate online buyer's premium if you're bidding remotely? Chances are no, because we try to keep it about the same on both platforms. If there's a buyers and a bidders, if there's online or live buyer's premium, we try to keep it identical. Sometimes the venue online will charge more for the real estate stuff, so you have to be wary of that. What is the deposit amount and when is it due? I can tell you that it's due immediately. You can pay then, or you can pay the attorney. And we actually call the attorney and say, hey, we have this person, here's their information, and we send them a fax that has all that information on it, and they sit there perched at their front step waiting for you. Come prepared with that exact amount in the correct form of payment. Now, some banks, when you cut a check that large, they will take it directly out of your account at that point in time. Others, they will reserve it, but then if you don't win, when you present them back with the check, then it goes back into your account. What type of deed are you receiving? A general warranty deed comes with a title guarantee, which is the best. A quick claim deed conveys only whatever interest the seller has, no guarantees. So say for instance you have somebody who is an heir of an estate and they have 1/4 of an interest in the particular property. Well, they'll quick claim that deed that 1/4 interest, and then the rest of it is still owned by the rest of the family. So you have to be wary of that. For properties with complicated histories, the deed type matters enormously. Sometimes you will get a special warranty deed. Sometimes you will just get you will get a certificate of deed, and then you will also get mortgage insurance or title insurance. But it depends. Again. Fifth, what are the default consequences? Know what you're risking if you can't close. And the reason why is because we don't don't treat you as the enemy. However, if you do something that puts into jeopardy the particular auction, then the sheriff's department, whatnot, will consider you a problem child. I don't want that to happen. So we want all good bidders, right? And any reputable auction company will make sure the terms and conditions are available in advance, typically on their website through the property listing, and you have to request them early. If you have questions, call the auction company the day before the auction day, not during, and certainly not after. We put ours on their website. We also put it in our auction listing. We also put it in the bidder packet, and we also ensure that if your brokers or your attorneys are interested in it, that we also send them a copy either by email, secured email, or by fax. So there's no excuse as to why you don't have any of those documents. Registration and bidding. This is going to be the most important piece. And you can't bid without registering first. And the registration isn't just a formality. It's the moment you agree to the terms, establish your identity, and in many cases put up the deposit or credit hold. And understanding how this works before you walk in and log in removes a lot of the day of anxiety. So let's take a look at how the registration works. Registration works with registration is how the auction company knows who you are, confirms you've agreed to the terms, come with a valid ID, a driver's license or passport, and if you're bidding as an LLC, trust, or corporation, bring the appropriate entity documentation with you. Why? Because we don't want to knock it off to a trust that doesn't exist or an LLC that's gone belly up. For many real estate auctions, you'll also need to provide proof of all funds or a deposit to hold at registration. And this is how the company verifies that you're a serious bidder for online auctions, and this is typically handled through a credit card authorization or a bank transfer ahead of the event. One good thing about this is this is qualifying your buyers. It's not like a traditional real estate sale where you have people who come in, kick the tires, and then they say, well, I may make an offer, I may not make an offer. But, you know, you have somebody comes in and gives you a $500 due diligence payment that takes the property off for 30 to 40 days, and then guess what? They back out of it. Well, none of that happens because they're serious buyers and they're there to buy. They get a bidder number, and once you register, you receive that beautiful bidder number. This number is your identity for the entire auction. So if there's personal property and real estate there, you want to make sure that your bidder number is close to you at all times. You don't want to give it to the 12-year-old kid who's sitting there bidding on Xbox stuff, and next thing you know, you've gone over $1,000. You want to make sure that your bidder number remains with you, and all bids made with that number under the online account or under the online account are yours and yours alone. I've had people who said, well, my daughter registered for your auction and she went and spent $1,200 and she thought there was free shipping. And I said, well, unfortunately, I wish I was Amazon, but I'm not. Shipping is going to cost you $3,000 blank, 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 blank. And they had a cardiac. And I was like, well, I'll return the items to the seller. The seller's not going to be very interested in the excuse, but we wound up bidding, or we wound up selling them later on. And the other thing too is don't let anyone use it. As I said, the daughter did it the last time and it got him banned. So don't share your bidder login credentials on online platforms, because if somebody's web browser gets hijacked and all of a sudden you're getting bills on your credit card for ridiculous amounts, that's an indication that you shouldn't have done it. And if someone else bids in your name and wins, you're still responsible, because we're not looking through the internet. We're looking at what your actions are when you're there. What makes bid binding? Any intentional signal to the auctioneer raise paddle, verbal bid, nod, confirmed online bid, which is click, is acknowledged as a binding bid, and you cannot take it back by any means. The practical implication can be deliberately in the room, and if you're scratching your nose, you don't wave your hand. The auctioneer is skilled enough at reading the room, and they will take them legitimate bids. But you scratching your nose or waving your hand for somebody to come into the door, we are generally smart enough to know that that's not taking a bid. But be aware of your movements, because even online, if you get up from your terminal, you may click on bid. And finally, let's talk about proxy bidding. If you can't attend in person, many auctions offer proxy or absentee bidding, and you submit your maximum bid in advance, and the auctioneer bids on your behalf up to that limit. And competing against live bidders, if the final bid price falls below your maximum, you win at the actual final price, and not your maximum. Confirm availability with the auction company well before the event. Now, I can tell you that there's a couple of ways of looking at this. One is you set a personal property limit of $100. Well, $100 is great. So if you are up to $95, the next bid is $750, and the individual who is sitting across the room bids $97.50, and then your bid is $100, and that was the last bid, then you win. If your bid up to $97.50, if we take your bid and your bid is up to $97.50, and then the next guy bids $100, your next bid is $102.50. Since you put the cap on at $100, it gets knocked off to the other guy and not you. That's how that particular situation works. So let's talk about the day of auction. The day of auction is when all the marbles and all the adrenaline is in the house. So knowing what's going to happen before it happens is one of the best advantages you can give yourself. Let me walk through the entire auction from soup to nuts, so nothing surprises you when bidding opens. First, arrive early. Don't arrive at the announced start time. When the announced start time is at, say, 3 o'clock, that is when I get up on the podium and I start asking for bids. It's not, we're going to start at 3 o'clock. We're not going to start registering at 3 o'clock. We're going to start the auction at 3 o'clock. So you want to get there at least 30 to 45 minutes early. And you want to be earlier if you want to do inspections, because we do inspections up to the time the hammer drops on those days. So arrive 30 to 45 minutes early before bidding opens, and registration lines can be long, so you want to make sure your bidder number is in hand and your deposit is ready, and the time to review the property one last time before the auctioneer steps up. The terms announcement. Before any bidding begins, the auctioneer will announce the terms of the sale. This is your last chance to get any questions or clarify something. And once bidding opens, the train has left the station, and attention to the buyer's premium confirmation and the deposit requirements and all the other stuff in the auction format begins. Bidding opens. The auctioneer begins with either a suggested starting bid, $100,000, or asks for an opening bid from the floor. If there's no opening bid from the floor, the auctioneer is perfectly within his rights under the UCC and through common practice to open the bidding at whatever in order to solicit a bid. $100,000. $100,000 now, 125. 125, 525. That does not mean that there's a reserve. The other thing too is that from there, bids will proceed in increments. The pace can feel fast, especially when the first-time buyer. Take a breath, know your numbers. If I'm calling $125,000 and you didn't understand I would bid $125,000, I'm asking for $125,000 to leave the previous bid. So the number that you're going to hear the most is the number I'm asking for. Don't let the energy in the room push you past your limit. If the reserve is $150,000 and you're comfortable bidding $150,000, if it goes above $150,000 and you're not comfortable with that number, do not bid, because we don't want you to be in trouble just like anybody else. So watch the auctioneer, not the other bidders. The auctioneer tells you everything you need to know: where he's looking, who he's looking at, where he's wanting to take the next bid. All of that comes right then and there. The other thing too is the auctioneer will point, and not necessarily point, but hold the spot as to where his high bidder is. So if you see where the high bidder is, and it might be a banker or something like that, then you know that you can probably bid up against that, and the bank may back off. You never know. Sometimes they do, sometimes they don't. Follow the hammer. When we drop that hammer, sold. And when I say sold, it's sold. The bidding has closed. And online it will be the bidding is closed, and sometimes it will say you may have won, and if you didn't reach the reserve, then it will say you did not win. This is the legal moment that the contract has been forged. And at this point you'll have purchased the property. There's no cooling off period, no inspection contingency, and no way to back out without consequences. And at this point in time, the seller can sue you for specific performance. It commonly doesn't happen, but you never know. And the paperwork. At a live auction, you sign the purchase agreement immediately after the hammer falls. You have a pen, review the document, but move quickly, because there's usually multiple persons waiting to cash out. Confirm the closing date, and note every deadline in your calendar before you leave. And if 9 times out of 10, if it's me, I will have those dates in a document in the bidder package, so you can carry them with you to your and take them to your particular individuals, your financing agencies, etc. So let's talk about your buyer's rights. Disclosures, as is applications, and where your legal protections begin and end. This is really important. You have legal rights that some cases are more than what you see at a traditional real estate sale. All right, so let's go. As is. Nearly every auction property involves an as-is sale. That phrase has a specific legal meaning, and it has also misunderstanding. It's one of the most expensive mistakes buyers make. As is means the property is being conveyed in its present condition. The seller is not agreeing to fix anything, credit anything, adjust the price for anything you find. Once the hammer falls, the property is yours, all of it, including the problems you didn't discover, the weeds, the trees, the fallen barns, all of it is yours. But here's what as is does not mean. It does not eliminate the seller's legal obligation to disclose known material defects, such as the roof, the air conditioning, if there's mold, mildew, lead, formaldehyde, if it's near a farm, or any of that other stuff. If the seller knows that the basement floods every spring and fails to disclose it, that may constitute a fraudulent or misrepresentation, even in an as-is sale. So if he doesn't do that, he does not tell you that there may be a leak in the basement, then you may back out of that sale. However, if he discloses it and you just shot over top of it and say, well, I didn't read that, then that does not, you're still locked into the sale. Even if an as-is sale is going on, the auctioneer makes a material misrepresentation about the property during the auction. That too may create a liability, such as, well, it was just as good when it was brand new. well, that's not true, and I generally do not do that. But I've heard plenty of auctioneers do that, and it really, really, really upsets me because that can cause harm to the sellers. So the important thing is to know your rights. Your most powerful right as a buyer is the right to know the terms before you bid. No reputable auction company should refuse to provide terms and conditions, disclosures, available property information in advance, and I give it to you in a bidder package. Your right to inspect the property is equally important. Attend every scheduled preview. Bring experts during that time. It's your due diligence window. If we say we're going to open it up for 2 days between 12 and 3, then your inspector needs to be there 12 and 3, not at 2:59, because the auctioneer is going to wrap it up, lock it up, and leave. We have had people who decided that they were going to show up at the last minute and expect us to stay there until 6 o'clock when they were going to get it done. No, they're going to be there at noon, and they're going to be finished by 3. In North Carolina, sellers of residential property are required by law to complete a North Carolina Residential Property and Owners Association disclosure statement. And it must be provided to buyers regardless of if they are just kicking the tires or not. They're required to have that document in tow when they go anywhere. And I'll tell you, if you get that and there's something that you disagree with, then you don't have to buy the property. Such as, does it have an HOA? Well, if it has an HOA, don't bid if you don't like HOAs, because I could tell you it's not going to work out well. The other thing too is that it must be provided to all buyers. If you're buying residential real estate in an auction in North Carolina, ask for the documentation before auction day. I attempt to create the same documents for commercial and industrial properties because you just never know what's going on unless you have them fill it out. And if they have a knowledge that something's going on, then it's helpful to have it there to protect them and to protect you. So here's an attorney note here. Disclosure requirements and as-is enforcement may vary by state. Some states have broader consumer protection laws that may provide additional buyer protections even in auction transactions. So you want to consult a local attorney who understands auctions before bidding on a high-value asset or complex properties. And you can understand that an attorney is always going to say, hey, here's an attorney note, contact an attorney. Agency and representation. This is one of my most favorite topics. It confuses a lot of real estate brokers, but it never really confused me. So when you're ready, we're ready. All right, let's go. So agency relationships. This is something that is the most important thing I can tell you about this is this. Assume no one in the room is looking out for your interests. Even your real estate broker to which you may have signed a brokerage agreement with. You have specifically hired them to do certain things. Special things. Special agency. The auctioneer. The auctioneer works for the seller, always, period. Their job is to conduct the sale ethically and professionally. And they are legally required to treat all bidders honestly and fairly, and that does not mean that we are representing you at all. But their fiduciary duty runs to the seller. In other words, if you come up to us and you tell us that you want this, that, and the other, I am under no obligation to do anything for you. I am under the employment of the seller, not you, unfortunately. If you ask the auctioneer for advice on whether to bid, understand the perspective you're getting. I will not tell you if you should bid or not. I would say if you think that you can do something with this property, then bid. If you think that it's going to be more cost prohibitive, then don't. It's that simple. If then. The listing broker. If a real estate broker is involved in marketing the property for auction, they represent the seller. The other thing too is the listing broker also has to be an auctioneer in North Carolina. Information that they provide about the property is provided in a service of that seller's interest to sell the best at the best price. This does not mean that they will lie to you. Professionals in this industry operate with integrity, but honesty and fair in representing your interest are two different things completely. That's why I tell people, ask the auctioneer, and then if you don't have any representation, the auctioneer generally can tell you who he considers some of the most outstanding people out there. Your buyer's agent. If you have a buyer's agent, here's good news. You can start your own representation. A buyer's agent is a licensed real estate broker whose fiduciary duty runs to you as the buyer. Sometimes they will come up to the seller and say, in order for me to present my buyer to you, I request a X percentage. This used to be called a clear cooperations policy. However, those days are over. Your buyer's agent works for you, and the sellers are going to say, well, he's going to pay you because I'm not, and that's more than acceptable. But the thing about it is that this is something that you need to do between you and your buyer's agent. Your auctioneer is not going to make any headway. You're not going to make any headway by damning the auctioneer to hell because he's not giving any concessions from the seller, because that's not his job. The seller agrees to it, and then we move away from there. Oh, that was interesting. So your commission or their commission at auction, in auction transactions, in very few cases the seller offers a buyer's agent commission as part of the auction setup. Sometimes it's not. It truly is the buyer's, or it truly is the seller's, responsibility to say, yeah, I want to do this, or no, I don't. The seller offers it, great. In other cases, when there's no buyer's agent commission offered, you would have to be responsible for compensating your agent directly, not the auctioneer or the seller. Clarify this arrangement before the auction, not after, because I can tell you that I've had some that come to me after, and they were hemming and hawing about how they weren't going to get paid, and since me being a agent for the seller, did not care. So you want to make sure that as a buyer, you pay your buyer's agent, because they don't like to work for free. Now, I can tell you this: dual agency law and required disclosures may vary by state. North Carolina, brokers are required to provide a working with real estate agents disclosure at the first meaningful contact. So you want to ask any broker you interact with who they represent. I will state this: if you are unrepresented, that's okay, because we have unrepresented buyers come up to us at every single auction. We will give you the packet, we will show you how to fill it out, but we are in no way going to give you advice whether you should bid or what you should bid or how high you should bid. We're not going to be doing that. We represent the seller, we do not represent the buyers. And by the way, we're not going to get a buyer's fee from you because we don't represent you. So you walk up to an auction and you want the buyer's packet, and then you want to know where to put in the numbers. Well, we can do that, and you're not going to be charged for that. However, you will be charged buyer's premium and all the other stuff that goes with it, because that is what the terms and conditions say. So let's talk about after the auction. A lot of times people get confused over what happens after the auction, and that's fine because it happens. You know, the contract execution, sometimes it gets complicated, sometimes it doesn't. But winning the bid is the beginning, not the end. What happens the days and weeks between the hammer falling and the keys changing hands are very critical, and the compressed timelines at auction closings leave little time or room for error. So we want to make sure that we have good mortgage companies. We want to make sure we have good inspection companies. We want to make sure that we have everything all buttoned up before auction day so we don't get caught in a trap later. So day 0, auction day, contract to sign. The purchase agreement is your contract. It specifies the purchase price, including the buyer's premium, the earnest money amount, and the closing date. All of the other material terms comes to you, and keep a copy. Read it carefully before you leave the auction site. Early deadline in that contract is firm, and every deadline in that contract is firm. So I want you to understand that once the bid is hammered off, you own it, but you got to pay for it. Title and escrow. The title company's closing attorney proposes or processes your transaction from here. They conduct a title search, examining the chain of ownership, identifying any liens, encumbrances, or clouds on the title that need to be resolved before closing. Once again, if there's a cloud on the title, it's the buyer's responsibility. Financing. If you are financing, your lender needs to move quickly because the auction closing timeline is typically 30 to 45 days. We've had companies where they say that we love our veterans, and our veterans are stuck 90 days out because the title because the mortgage company the financing company can't get their act together. Sometimes they're shorter than 60 to 90 days. Probably the 60 to 90 days need to happen before the auction, because they're going to be looking at a 14 to 21 day closing window instead of a 30 to 45 day. And traditional real estate transactions are a nightmare whenever you have somebody who's finance company who drags feet. So you want to work with a lender with experience in auction purchases and have your documentation ready from day 1. If the appraisal comes in below the purchase price, you will typically need to cover the difference in cash. Auction contracts generally do not include a financing or appraisal contingency, so you bid at your risk. So if the house is worth $280,000 and you bid $300,000, you are responsible for the $280,000 if that's what the appraisal came in as. Closing. On closing day, you'll pay the entire balance due, the purchase price plus buyer's premium, less your earnest money deposit and certified funds or Visa and wire transfer, and the deed is signed. It's recorded, and title transfers kapowie. Anything that needs to be handled via the attorney, such as costs, etc., 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 it's all factored, and then that's taken care of. And once you have closed, for most auction purchases, possession transfers at the closing. Some auction contracts, particularly for occupied properties, specify a different possession date. And the reason is because sometimes the people who are inside of it need to understand that the house has been sold, and their rent is going to be XYZ, and if they don't agree to that, then they have an ample amount of time to get out so you can move in. You want to confirm this in the contract before closing day, and we try to make sure that there is that separation of what happens when there's people in it versus not. And sometimes the people who are in it are usually renters. They're not people who have been foreclosed on, because that's an entirely different animal. Closing procedures, deed recording, and possession rules may vary by state, and always work with a licensed attorney for the title or title professional in the state where the property is located, not out of state, because sometimes out of state stuff can screw you up and get you into deep kimchi if they goof it up so much as a hair. So let's talk about common mistakes and red flags. We're almost wrapping this up, and I'm so happy that you stayed around this period of time. And this section is built on hard experience, mine and others. We have a long line of stuff that we could tell you. And the mistakes I'm going to walk you through are real, they're common, and they cost real buyers real money. Knowing them is how you can definitely avoid them. So let's get to burning the midnight oil. So, first one, not reading the terms. I've seen buyers lose their deposit over provisions that were clearly written in the time that they were agreed at registration. The buyer's premium, the deposit requirement, the as-is clauses, the no contingency language, it's all there. Read the document, every word, before you register. If you have difficulty understanding lawyer speak in there, because I have difficulty with lawyer speak, ask somebody to help you. Mistake number 2, forgetting the buyer's premium. This one surprises even most experienced buyers. You set a mental limit of $180,000. You bid $180,000. You win, and then you realize the buyer's premium is 10%, and you actually owe $198,000. That's $18,000 more than budgeted. Always work backwards from your total budget to determine your maximum bid. Mistake number 3, skipping the inspection. As I was coming up in traditional real estate, I have always told people who wanted to buy the property sight unseen, always get an inspection. And there are some who told me that, no, we don't want to do that, and then they got burned, and then they come back to me, and I said, here's the document that you signed saying you didn't want to get an inspection. I can't help you because you refused to get an inspection. I can only advise you in doing certain things because that's what my fiduciary duty is. Your duty as the buyer is to either take me up on those or say, no, I don't need it right now. Some buyers don't attend preview periods because they assume that they can inspect after winning. You cannot. Or if you can, it's for information only. And you can't back out of it. And the preview is your inspection period. Use it. It's like having an open house, except this is your time to go in and inspect everything before your first bid. Bring the professionals that you need in order to inspect it if the property warrants it. Mistake number 4, bidding without financing in place. This is the most dangerous mistake that buyers can make who need a mortgage. If you win and your financing falls through, your deposit is gone and you may face additional liability. Get pre-approved specifically for an auction purchase before you ever bid. Number 5, emotional bidding. Auctions are designed to create competitive energy. That competitive energy drives up your adrenaline. You are more likely to throw your card up in the air because you think the guy across the room is trying to screw you than if you become emotionally attached to the property, so you're not going to let anybody else have it, so you think the guy across the room is trying to steal it from you. That's not the case. Auctions are designed to get that energy to be intoxicating so you bid. And it's exactly how buyers end up bidding $50,000 more than they intended. So set your maximum in writing with your buyer's premium factored in before the auction starts. Then have the discipline to honor it. And a lot of people don't have that discipline, so they get in trouble quite often. Mistake number 6, not researching the title. I've seen buyers win properties carrying 6 figures in tax liens they didn't know about. A preliminary title search costs a few $100, and it could save you from catastrophic losses. Do it before you bid. It's well worth the money. So let's talk about other red flags. Some of the most major red flags that I've seen have been, sometimes they're plain and simple, and people still do so. So the auction industry is overwhelmingly populated by professionals who operate with integrity. But like any industry, there are bad actors. We've seen real estate brokers who host auctions and they don't even have terms and conditions there, and they commonly get in trouble with probate clerks of court. And when you're talking about fast-moving sales, this environment, like any live auction, your protection is your preparation. And a lot of people just try to believe the professional that's there versus doing their own homework. And of course, we know that can't copy off of somebody else's paper and have the same result. So let me walk you through the major red flags, only because I want to make sure that you understand that not everybody is a professional real estate auctioneer. All right? So if a company won't provide terms and conditions before auction day, that is a problem. There is no legitimate reason to withhold them. Walk away. Now, I will tell you that sometimes I will run out of the buyer packets, and so I have it on my phone where I can email it to them immediately. And sometimes they will get it and sometimes they won't, because God knows wherever you're at, you could be calling your mom and asking her how she's doing, and then she says, oh, and then hung up. So the same deal with that. Second, always verify licensure. For real property, you need to have both auctioneer's license and a real estate broker's license. These are public records. You can verify them through the North Carolina Auctioneer Licensing Board and the North Carolina Real Estate Commission in minutes. Don't take that hard. My licenses are everywhere. I'll give you my license now, 303-262. My auction license, 8247. It's not that difficult. I even have my Windows 98 CD key memorized. So if you're not permitted to inspect the property, that's the next one, at all before bidding, that should give you a serious pause. An ethical seller wants serious buyers, and serious buyers need access. I will tell you that we will open up the property and allow you to inspect it up until bidding has started. Then we close the property and then we start auctioning. And then we will reopen that property right after bidding has ended. And the reason why we do that is because we want to make sure that anybody who's inside the property can be out here to bid versus, well, I didn't realize that you were starting the bid. Well, we want to make sure everybody is there who wants to bid on the property. The trust account issue is critical. Your earnest money deposit must be held in a separate trust account, not in the auctioneer's operating account. Ask directly. If you can't get a clear answer, that's a red flag. I will tell you right now, I do not have a trust account. I am not interested in opening a trust account. It goes directly to not the auctioneer. It goes directly to the attorney and goes into their trust account. And with their trust and escrow account, it goes in, and then all of the checks go out of the attorney stuff because it's well documented and everybody gets a copy of the documentation. The absolute versus reserve issue. If an auction is marketed and advertised as absolute, a reserve cannot be placed on it after advertising has begun. Any auction that markets itself as absolute but behaves as it's a reserve at the close of the bidding is potentially violating state law. In fact, I can tell you, they're violating state law. They're also violating federal law. And finally, there is no written contract. Now, let me explain this to you. In North Carolina, we are a statute of frauds state. Not frogs, frauds. Which means every single contract for every single auction has to be in writing. Every single contract for real estate has to be in writing. Both auction and real estate is required to be in writing. Now, that's for the seller. Well, what about for the buyer? Everything has to be in writing. So your buyers, your sellers, your buyers, all of that has to be in writing. And finally, if there's no written contract, then there's no real estate transaction. period. We have seen it where somebody wrote a check for the property of blankety blank blah, blah, went to the courts, and the court said, well, there's the offer, there's the signature, there's the memo, flips it over, and there is the acceptance. Crazy, isn't it? We have these long drawn out contracts for real estate, but you can flip somebody a check and poof, just as good. Any legitimate auctioneer or realtor or real estate broker has written documentation that gets executed for every single sale, including at the fall of the hammer. We have a seller packet, we have a buyer's packet, we have an auction packet. Buyer gets the buyer packet, seller gets the seller packet before, during, and after, and then the auction packet that has all the contracts and everything, and then that gets put up, stuffed into a manila mailer, and then as we are going, it goes to the attorney's office, in which the attorney will take it out, process all the paperwork, send me copies, send the seller copies, and then we turn around, and then when he finishes it, then everybody gets a copy of the auction document, the seller document, all the disclosures and everything. So we try to do it up and up, and we try to do it in a tone to which everybody feels comfortable with the transaction. So before I wrap up, here's a practical checklist of things that you can do or use before every auction, whether you're bidding on the box tools at an estate sale or a 200-acre farm. Go through each item if something is on this list and isn't checked, and consider whether you're ready to bid. Research. Have you read the terms? Have you calculated your true maximum bid? Hammer price plus premium. Do you know if this is absolute or reserve? Property due diligence. Have you physically inspected the property during the preview period? For real estate, have you reviewed the title? Have you checked tax debt? Have you confirmed the property can be used the way that you want to? Money and financing. Do you have your deposit funds prepared on the right forms? If you need a mortgage, is your financing pre-approved for this property in this timeline? Is it in the right form? Is it cash only, or is it going to be requiring a wire transfer? Only you can tell us. Registration. Are you registered? Do you have your bidder number? If you're bidding remotely, are your proxy arrangements confirmed? And you can print this and take it with you, and the buyers who work through this list before every auction are the ones who close confidently without so much issue. Alright, so now that we wrap this entire thing up, here's my contact information. When you're ready, I'm ready. We have just covered every major component for an auction process, from the buyer's perspective, the formats, the things that really cost, how to research a property, what happens at an auction day event, what happens online, your rights, who represents you, and how closing works, and the mistakes to avoid. The knowledge is your competitive advantage. Most buyers walking into an auction have never thought about half of what we have covered today. You have. The auction process rewards prepared buyers. Sellers benefit from competitive bidding, and buyers who do their homework, who know their bidder number, know their terms, and understand the process. They're the ones who close on great properties at great prices. So if you like to go deeper at any of these topics, if you have a specific property that you're looking for, or an auction coming up that you'd like to discuss, I'm here. Consultation is free. Conversation costs nothing. But if I have to come to you and you're 5 hours away, then we're going to have to talk a little bit more about gas. My name is Matthew Price, and I hold both the North Carolina Auctioneer's License and the North Carolina Real Estate Broker's License, and I work with sellers at auction every single day. Buyers, I answer questions that are asked of me, but normally that is pretty much superficial compared to what the sellers ask. And I would be definitely happy to help you navigate your next purchase. Call, email, visit my website, go and bid with confidence. And I would love to open it for questions, but unfortunately I don't have a live audience. So what I'm going to do is, here is some frequently asked questions. Can I bring a buyer's agent to an auction? Yes. And I'll encourage it for real estate purchases and engage them before the auction so they can help you prepare. Clarify in advance whether the buyer's agent commission is offered by the seller. I can tell you in my auctions commonly it is not. And post-auction is not when that gets discussed because the deal is done. What happens if no one bids? It's an absolute it's an absolute auction, and the auctioneer will typically work hard to get at least one bid, and will reduce the opening ask. In a reserve auction with no qualified bidders, the property may be withdrawn. In a minimum bid auction, if no one bids at or above the floor, there's no sale. What is a title insurance? What is title insurance, and why do I need it? Well, title insurance protects you against defects in the chain of title that weren't discovered before closing. For any real estate purchases, including auctions, title insurance is strongly recommended by just about everybody. So your closing attorney or title company can provide a quote. Here's an example. I have my house that I live in, I have owned since 2003. Before that, it was a farm. I have clear title all the way to whom originally owned it for almost 90 years, almost 100 years, including the time that I've owned it. So that title will go back, only to the previous owners. Now, there are some titles out there that have 16, 17, 18, 19, 20 owners, and it's got to go all the way back to where they can say, okay, we have a clear chain. Can I bid at multiple auctions at once? Absolutely, but be careful. If you win more than one, you're going to be responsible for both, or the 3 or 4. You're going to be responsible for closing on all of them. So you'll face default consequences on whichever you walk away from. So don't overextend yourself and don't get yourself into trouble. We don't like that with folks. So the other part is the buyer's premium always disclosed in advance? Absolutely. It's disclosed just before we start bidding. It's disclosed in the book, and under the law, it's required to be. So any reputable auction will say so. If you have to dig and dig and dig and dig and dig and dig, my question is, what are they hiding? Are they trying to hide it so you would bid more? But then again, there you go. Can you get a mortgage for an auction property? Absolutely. Do I need a real estate attorney for an auction purchase? It's strongly recommended, but you don't have to if you don't want to. An attorney can review the title contract terms and advise you on state-specific legal protection before you bid. What if I discover a problem after closing? It's your problem. It's an as-is sale. Post-closing remedies are limited. Your protection is through pre-auction due diligence. If the seller or auctioneer made material misrepresentation, then you want to consult an attorney. Can I back out after winning a bid? No. I'm not going to say generally no. No, you can't. And the auction contract is binding at the fall of the hammer. Default means forfeiture of your deposit and potential additional liability. Only bid what you can close on and don't bid anymore. Folks, thank you so much. You're ready to go bid with confidence, and I hope you all of the best. And excuse some of the personal tics and whatnot. I'm in an office that sometimes has weird things happen. So anyway, I am Matthew Price. I'm your North Carolina auctioneer and your real estate broker. My number is 919-614-6288, and I'll be happy to help you or answer any questions that you might have. Have a great night.